If inflation keeps going up and the Fed doesn't hike, that means real interest rates are going down a lot more than people think. So this policy is going to be bad for the dollar, and it's going to be bullish for gold. Higher inflation that the Fed can't fight is bullish for gold. The only time higher inflation is bad for gold is if you think the Fed's going to successfully fight it with interest rates high enough to actually bring it down and give you a high positive real rate, which would make gold less attractive. But that's not going to happen. The Fed's not going to hike rates in line with the increase in inflation. Real yields are going to fall, and and gold's going to go up.
According to prominent economist and CEO Peter Schiff, gold markets are experiencing significant headwinds. The precious metal recorded a 2.3% decline for the week, falling below the critical $2,600 threshold. Currently hovering around $2,570, gold has struggled to stage a meaningful recovery despite bouncing back from a 2-month low in the previous session. The metal's recent performance has been notably affected by a strengthening U.S. dollar and lingering uncertainty surrounding the Federal Reserve's interest rate policy. In contrast, silver has demonstrated remarkable resilience in the precious metals market, showing more excellent stability with a modest weekly decline of 1.4%. The white metal has maintained steady support around the $30 mark, trading at $30.35. Despite encountering similar headwinds from the stronger U.S. dollar, silver's comparative strength has drawn considerable attention from market analysts. Schiff maintains a bullish long-term outlook for gold, emphasizing the current economic landscape. Rising inflation combined with the absence of corresponding Federal Reserve rate hikes is expected to result in falling real interest rates, a scenario that traditionally supports higher gold prices. This perspective is reinforced by the historical inverse relationship between interest rates and gold prices, with lower rates typically driving gold prices higher. Many analysts share this optimistic outlook as the Federal Reserve signals potential rate cuts, anticipating further gains for the precious metal. While immediate rate cuts may not directly translate to gold price increases, the metal has demonstrated impressive resilience, particularly in outpacing inflation. Gold's remarkable 80% appreciation over the past 5 years, significantly exceeding inflation growth during the same period, reinforces its role as an effective inflation hedge. Before we begin this video, please subscribe to our channel and hit the bell icon so you'll never miss an update. Also, remember to share this with anyone who might benefit from it.
Gold dropped 2.3% on the week, continuing its post-Trump pullback, going below 2,600. Silver was down 1.4% on the week. Silver has been holding up better than gold during this sell-off, and it has been holding the $30. It did briefly trade below it, but it closed the week at about $30.18. Remember, I said that I thought $30 silver was like $2,000 gold, and I think that's kind of the support, and it certainly is looking like it because it's holding up with the gold sell-off. Of course, fool's gold, aka Bitcoin, went in the opposite direction. Bitcoin, I'm looking at the Bitcoin ETFs. They were up about 11% on the week. Bitcoin itself is trading above 90,000. In fact, I think it's above 91,000, almost 92,000. So this is record territory. Not yet record territory in gold terms, I don't think. I gotta do the math. Maybe I'll do that on the commercial break. But MicroStrategy up 13.5% on the week, continues to borrow money to buy Bitcoin. But look, Senator Loomis came out and she's introducing, her bill for the U.S. government to buy Bitcoin, 1 million Bitcoin, and pay for it by selling gold. I mean, what an asinine trade to make on behalf of the American public. I mean, if this actually ever happened, if this bill was actually passed and signed into law, and the U.S. Treasury was actually dumb enough to sell off America's gold to buy 1 million Bitcoin, first of all, the Fed may not cut rates as much as the market expected. But the one thing they're not going to do is hike them. Powell is not going to surprise the markets by hiking interest rates. Right? And imagine the reaction of Trump, too, if he did start hiking rates, but they're not going to do it, especially if the economic data starts to get worse, which it probably will, because I think they were hiding a lot of bad data, trying to, make the economy look better to help elect Harris. And so now that Trump's in fact, once he becomes in, and say, hey, let's dump some bad data out here to really, to make, why are we, trying to whitewash the economy when we got Trump? So the Fed is going to be looking at weakening economic data and rising inflation at the same time. And remember, I went over on last week's podcast the Fed has no plan for stagflation. We get a weakening economy and rising inflation, the Fed's got nothing, right? They're shooting blank. But the one thing I know they're not going to do is fight inflation in a weak economy, because that's political suicide. So it's not going to happen. So that's not good for the dollar. It's bad for the dollar that we're going to have an accommodative Fed and falling real interest rates. Because if inflation keeps going up and the Fed doesn't hike, that means real interest rates are going down a lot more than people think. So this policy is going to be bad for the dollar, and it's going to be bullish for gold. Higher inflation that the Fed can't fight is bullish for gold. The only time higher inflation is bad for gold is if you think the Fed's going to successfully fight it with interest rates high enough to actually bring it down and give you a high positive real rate, which would make gold less attractive. But that's not going to happen. The Fed's not going to hike rates in line with the increase in inflation. Real yields are going to fall and gold's going to go up. It's interesting that Bitcoin and gold are going in the opposite direction, right? Bitcoin's been going straight up ever since Trump won, and gold's been going straight down. Again, I've said this. Bitcoin is the anti-gold. It's not digital gold because it does the opposite of whatever gold does, because it's nothing like gold.
Peter Schiff has raised concerns about the current trajectory of the yield curve normalization, forecasting a steepening that could exceed historical norms. This exceptional pattern, Schiff explains, stems from two primary factors: escalating inflationary pressures and an expanding national debt burden. The ongoing trend suggests that Treasury yields could experience upward momentum in the months ahead. The significance of yield curve behavior lies in its fundamental patterns. During typical market conditions, the curve exhibits an upward slope, where longer duration bonds provide higher yields as compensation for the increased risk investors assume over extended holding periods. However, when the disparity between long-term and short-term yields expands beyond normal ranges, it frequently indicates growing inflation concerns throughout the broader economy. Schiff's observations become particularly significant in today's economic environment, where multiple factors fuel inflationary pressures. The combination of rising labor costs, higher commodity prices, and ongoing global supply chain disruptions has rapidly increased long-term bond yields than their short-term counterparts. Adding to these concerns, Schiff points out that the Federal Reserve's current policy of quantitative tightening, notably different from the extensive bond-buying programs of the pandemic era, has further contributed to the rise in long-term rates. Let's get back to the video.
10-year U.S. Treasury closed at 4.44. That's the highest it's been since Trump was elected. 30-year yields, people don't talk about those as much, but we're at 4.62. So we're now closer to 5% than 4%. We were below 4 when the Fed cut rates by 50 basis points. What was that, just September? In fact, the Fed has now cut rates by 75 basis points, the Fed funds rate. The 10-year Treasury is up 75 basis points the other direction. So it's a 150 basis point swing between the Fed funds and the 10-year Treasury. This is the opposite of what the Fed had hoped. The purpose of the rate cuts was to bring down longer-term rates too. They wanted relief to the housing market. They wanted to make buying homes cheaper, so they wanted mortgage rates to come down. The markets had believed that cutting rates would be good for the long end. After all, that's what happened with all the other rate cuts when the Fed kept cutting rates. In fact, when it went to zero during COVID, right, rates in the long end went to below 1%. Of course, the Fed was doing quantitative easing at the time. Now they're still doing quantitative tightening. In fact, I think the balance sheet just slipped below $7 trillion for the first time since they started doing quantitative tightening. But as I've been saying, without the Fed doing quantitative easing, long rates are going to keep rising. We're not even close to the end of this as the yield curve normalizes and actually ends up being steeper than normal due to the inflation trajectory. The Federal Reserve is likely unconstitutional, is because the government tried to get around the Constitution by creating the Fed. Said, oh, look, we're not doing it, right? The Fed is doing it. They're totally independent. Well, BS, they're not totally independent. They're really beholden. The reason the Fed has to be independent is not because the guys that drafted the Federal Reserve Act thought, hey, it's a good idea to have an independent Federal Reserve. Like it's better for policy as a check on the government. No, it had to be independent because if it wasn't independent, the whole thing was unconstitutional. That is the reason it would be unconstitutional for Congress to do it. But I think it's unconstitutional to do it indirectly. And of course, when the Federal Reserve Act was upheld as constitutional, it was when Federal Reserve notes were real notes, obligations of the Federal Reserve to pay lawful money gold and silver coin minted by the U.S. government. So initially, they were legitimate, but now they're irredeemable. So there's never been a court that has held that irredeemable notes issued by a private banking syndicate during peacetime are constitutional. Now, I don't think any judge 100 years ago would have ruled it that way. Who knows what the justices would do now? But I just thought it was ironic that they're saying, oh, no, it's the Federal Reserve is unconstitutional. Let's let the government do it. No, if the government did it, then it would really be unconstitutional. It's much better to have the Fed. And yes, it is better to have some independence, even if it's just a veneer, right? I mean, a little bit. We need to get rid of the Fed, which is, end the Fed. Let's get rid of the Fed. But what they're saying is, let's get rid of the Fed and let's let the government do the Fed's job. I don't know if they mean Congress or the executive. They probably mean the Treasury, right? They're saying that, the Federal Reserve is unconstitutional, right? It's a private banking syndicate. Why are they in charge of our money? That can't be constitutional. We should have the government do it. Let's get rid of the Fed and let's let, Donald Trump decide what interest rates should be.
As inflation rises and real interest rates remain low, the outlook for precious metals remains positive. Gold and silver, historically seen as hedges against inflation, are likely to benefit from the ongoing economic pressures. Despite concerns over interest rate cuts and rising yields, the persistent trend of inflation combined with weak real yields will likely continue to support gold's upward momentum. Similarly, with its relative resilience, silver is expected to maintain support at key levels, reinforcing its role as a valuable asset in uncertain times. With inflation on the rise, do you think gold and silver will keep climbing? Share your thoughts in the comments below. If you found this video insightful, don't forget to like, subscribe, and hit the bell icon for more updates. Thanks for watching.